And welcome out, traders. It is hump day, and we are back here in the markets with our halftime report. It's Tackle Trading's daily show where we go through the stock market one step at a time, as well as commodities, economics, individual companies, trade setups, sometimes options, whatever it is on our mind that we find is interesting, relevant, and important. We bring it to you, we analyze it, so you can digest it and better run your daily routine. Coach Tim out here, welcome you guys out. Hashtag Team Tackle right in the chat when you pop in here today. If you are brand new to our channel, welcome. We do this show every day. The markets go live at 12:30 p.m. Eastern. We also have a special show tonight, our weekly Wednesday Trade Masters series. Make sure you hang around and stick for that. But click that bell, click subscribe, and come back and join us every day so you know whenever we do go live. Let's get down to business here. We got Coach Matt, Coach Tyler here to analyze the markets today. Start with you, Matty. How you doing today, sir?
You know, Tim, I'm doing absolutely fantastic. Excited to be here with the crew to break down the market activity here on a Wednesday hump day this week. And it kind of feels a little bit like a throwaway day in the market, but you got some decent action happening out there. So excited to be here.
It's a reiteration of a lot of the themes that have been developing here for quite some time. And we're going to take a look at some of the sectors, some of the commodities that are doing that. Obviously, S&P bouncing on Monday was the story of the week so far, just holding the 50-day moving average. We're holding trend, we're holding pattern. Tyler, before we get into the analysis, just how are you doing, sir?
Hey, don't worry. I put on my rally cap. I'm going to save you all. Okay.
Don't you have to turn that thing inside out?
Listen, I don't know how you do it. I don't know how you do in Emery County, but we're not. We're not that crazy.
Yep, inside out, backwards. Listen, you do what you have to do when you're from Emery County, Tyler.
That's right.
I got it. Yep.
Rally cap. I haven't thought about that in a long time. That was fun when we were kids, though. Turn it inside out, flip it around. Absolutely.
Get ready.
Get the energy ready. All right, let's light it up, guys. Let's rock and roll. Start with the technicals here, Tyler. Walk me around the indexes. Just tell me what you're seeing here. Then we'll have Matt come in and give some insight as well.
Yeah, obviously this is messy. I mean, you would have preferred to have seen immediate follow through after Monday's rip higher. On a positive note, if we can hold the lows of Monday, essentially, hopefully we get a little bounce here and you put in a little higher low. The thing that's tough is you gotta hesitate or be cautious with over analyzing every little move when the market gets choppy, because you're just gonna get frustrated. So I could spin this bullish, Tim, by saying, hey, we're still above where we were on Monday. Maybe we can get a bounce in here, put in a little higher low. You know, you can imagine if on the intraday chart that you're putting in a little bit of a higher low here. Yeah, that's good. I think that's a positive takeaway. We're not down that much today. You're down 0.5% on the S&P. It's not terrible. But ultimately, this is just teasing us until it finally breaks out one way or the other. Bears thought they had it a couple days ago. Bulls thought they had it on Monday. And it's making you be patient, be on pins and needles a little bit here. So I think it's tough to make a strong directional call on the S&P until it takes out the highs or the lows.
Mm-hmm. Matt, what are your thoughts on technical conditions on the S&P right now?
Yeah, I certainly agree with Tyler here. Looking at the technicals, I mean, Monday was. I do think the storyline of this week has already been written. I just think we're kind of passing the time waiting for this week to kind of close up shop here. I think Monday was the storyline. I really do. You know, the market holding that 50-day moving average, that to me was probably the most important technical, fundamental, economic, or political event this week, quite frankly. You know, I look at the landscape out there and I don't see anything even close to the importance of that 50-day moving average holding on Monday this week. So I think the storyline has already kind of been written, and now we're just kind of in that patient lull of waiting to see where the market wants to pick that next direction. But yeah, you got to like the fact that as a bull that, you know, the market held its 50-day moving average. I still think it was a good hold. You know, as a bear, you don't like anything about anything in any capacity, about literally anything in the market. You know, like Tyler said, they thought they won on Friday. No, they never win. That's not what bears get, like literally ever. So, you know, as a bear, you're like, well, okay, let me go hibernate a little bit more because of Monday. So I think you're just in this little bit of a moment in time where there's not a great technical moment. But again, like I said on Monday, I don't think people understand the importance of Monday's candle. and the importance of that market holding in that capacity. And so in the short term, it gave the market a little bit of reprieve. And quite frankly, right now, the market's working out the theme. And it's continually been doing that over the course of the last couple of days. And that theme, the economy reopening up theme, I don't know how many times I've said it since the election, Tim. Like literally, like every day, 10 times.
Yeah.
Like literally how many times I said this is not a swing trading theme. This is not a pandemic related theme. This is a true economy reopening up theme. This is a true cyclical play theme. And it quite frankly, it reminded me of what happens at the lows of recessions and the lows of market lows. And so I just saw it more as traditional sector rotation, and that has a much longer time horizon on it than swing trading themes.
Mm-hmm.
So the market's just simply taking time to move forward with that belief system.
Mm-hmm.
Today's hump day, guys. It's a random Wednesday with no economic activity, not a lot of corporate news and zero political news. So, I mean, that's today.
So this is one of those days in the market where we get questions like this very often. The one we got in the chat, is it a day where you open new positions, guys? I mean, are you
It's
looking?
a stock picker's market in
Yeah.
a general bullish uptrend, and I will say that answer every single time I get asked that question.
Mm-hmm. Yeah. Yeah. I added one trade today. So I think there's always the opportunity when you find them for sure that you can go after it for sure. By the way, I
get that question, Tim.
Mm-hmm.
I do. But go look at the chart of the 10-year. It's a general bullish uptrend in a stock picker's market. Do your job.
Not the 10-year bond, my friend.
No, definitely not the 10-year bond. No,
I mean,
that's a good momentum trade to the top side there, Tyler.
Look, I was like, all right, let's go yields. We'll do it.
Tyler's like, listen, I still want to talk to Matt about inflation. Let's have that conversation again.
I get it.
Yeah.
Okay.
But
I gotta read one comment here, bro. I have to. I love it too much. Virus, and I apologize for cutting you off there. I'll let you finish. Virus Feedy just said something in the chat that just caught my attention. You guys have taught me more in the last month than anybody else. And Virus, that's what we do here. We do a lot of education. We're here to go through the markets. We appreciate it. You keep putting your butt in the seat, coming and showing up. You'll continue to learn more over time as we do this for sure. But you're right, though. I mean, long-term uptrend, things have been healthy. Here we are.
I know, but guys, it's a day where the S&P is down 0.50, a 0.5% there.
Mm-hmm.
It's doing literally nothing. Let's not be the dudes that overreact to nothing.
Yeah, I agree.
Now, if you want to talk about tech, there's a little bit of different read happening in tech right now.
I do want to talk tech. I want to talk financials and energy. Tyler, can you flash through the indexes, but also specifically on the sectors? Also give me a read on tech, energy, and financials today as well.
All right, you just shut up for 30 minutes and I'll do everything you just said. Let's start with tech. So this has been the laggard, obviously. And when you look at this chart, it is more ominous than the S&P 500. But this is not new because tech sucked on the first phase of the downturn, right? On the first phase of the downturn, tech got hit hardest. You've seen rotation out of tech, the high growth names, and you've seen that move into small caps and financials and energy and the reopening plays. So all this is a continuation of that theme. It's not necessarily new, it's just a continuation of that. And so for those that have been bottom fishing in tech, yeah, today kind of sucks because you're early. Tech is still out of favor right now. This would give me a little bit of concern, but quite frankly, I don't know that you're looking at a lot of tech stocks for bull plays anyways. So no. Even if you weren't aware of this and you were just looking for the best looking charts, you wouldn't be obsessing about the tech sector right now anyways. Right?
I would hope that's the case, Tyler. I would hope that after this much data and this much time frame that people are not looking at tech as a recovery play right now.
Yeah.
I would hope that. But my concern is they've been front running tech for a year and the market is really slow to change when the market changes, right?
Yeah.
And so the market changes, but something that's been working for them for 9 months or a year, they're not just going to change. They're going to say, no, let's double up to catch up here, right? Let's whatever that next phrase of BFTD is, let's do that. Whatever that next diamond hands, laser eyes, coal miner hands, whatever we're doing here today.
Yeah.
Okay. Whatever that is, right? You have some real rotation that's happening out of tech. It just has. It's not the leader of the market. And if tech is not the leader of the market right now, it shouldn't be the leader in your portfolio either.
Yeah.
Yeah, you should have energy and financials, and you should have a good mix and blend of the
And so
things that have
that's
been doing well. Yeah.
And so that's what I'm talking about is not just the trading. If you're technically trained as a trader,
Mhm.
you're not looking at tech right now.
Yeah.
Like your eyes will not look at that garbage charts right now. Go look at CRM. If you're a trained technician, you look at that CRM and you're like, oh, let me just go puke up last night's dinner one more time.
It's ugly, and I hope.
Right? It's just garbage.
Yeah.
Yeah.
Like anybody looking at this be like, who is going to buy that?
Yeah.
Right. So like as a technician, no, you're not looking at tech because your eyes are never going to be trained to look at that type of garbage on the buy side. So
Right.
as a trader, you're always going to go wherever the technical movement is, right?
Mhm.
But as those investors, I certainly do believe that because of what happened last week, not last week, but last year, you probably have some portfolios that are very heavy overloaded on the tech side or on the communication side or on the discretionary side. And so it's not a bad thing every now and then to pull the weeds, guys, to make sure that your portfolio allocation is where you actually want it to be, to make sure if you're targeting, hey, I want 20% in tech, but based on what's happened last year, and again, there's 11 sectors out there, guys, 20 is a high percent. Well, if you want 20% in tech, and because of the price appreciation that happened last year, and because of the performance of technology last year, you now have 30%. Well, what would the pros do, guys?
Trim some.
They would trim some of the bull like Warren Buffett did with Apple, and they'd go
Mhm.
buy him a nice little insurance company,
Yeah.
right? Just not Rocket. Let's not do that today.
Rocket.
Yeah, let's not do that today.
No.
But you get my point. It's not about radical shifts, guys. That's not what Buffett did, and that's not what we should do. It's about simple profit taking measures where you reallocate that position in a better position to fit what's the market, to fit what's working in the marketplace. And what's working in the market right now, anyways, in the short term, it's not tech, it's
Mhm.
energy.
Yeah, energy's been working, and again today, even we're seeing the strength in energy right now. Crude bouncing a little bit, but the XLE is up near the high, almost ready to break out. Absolutely, 100%. I agree. Your eyes can't like what you're seeing there,
Well,
and
but that's when you're a trained technician, you can put any chart on this, you put any symbol you want on this. Your personal passion over Disney is not going to offset what you see on your eyes because you're a trained assassin and you're going to focus on the technicals first.
Mhm.
You're not going to look at the NASDAQ chart here as a technician and be like, hey, let's just go buy the dip after a failed 50-day moving average and a violation of trend and pattern. That's not going to happen.
Mhm.
Yeah.
It's not there yet.
So,
Yeah,
And
absolutely.
and again, people who are saying the death of tech, they're wrong, and they will always be wrong. Stop listening to radicals. Like today is a no radical day for me. Like I'm just done with radicals here today. So don't listen to radicals. Tech isn't done. Tech's just taking a little bit of a nap, guys. A nap doesn't mean death.
No, naps sound nice, actually. I got no problem.
That's all it's doing is
Everybody
taking a nap,
Everybody
guys.
likes a nice little nap in the
That's all,
afternoon,
that's all that's happening. A little siesta, bro. That's it.
Absolutely. Ty, keep flashing through the rest of the indexes and sectors that you find interesting here. Let's take a peek, and then I want to get to commodities and keep working through the markets.
so if we go to the anti-techs, small caps would be the anti-tech, right? The performance you've seen here is the antithesis of what you've seen in tech. So if you want to know where the money is going, is it coming out of all risk assets, or is it just a shuffling of the deck and moving somewhere else? Just look at the performance. The NASDAQ's down almost 2% today. Small caps are up 0.5%. That tells you everything you need to know in terms of what's going on today. But if you look at the broader perspective here, if IWM was tech, it would be down around 205, maybe 204. It'd be down here below its 50-day moving average, but it's not. It's not. It's holding firm. It's just consolidating. And by the way, compared to where we were on Friday, you look how much higher today's low is. And again, I don't want to read too much into the candles when you're chopping. But the point is still valid. We didn't go all the way back down to Friday's low like tech did. You're seeing buyers step up a little bit quicker. If today's candle holds, this is constructive. You're just consolidating near the 20-day moving average. It's fine. And we need this too, by the way. If you look at the weekly chart of IWM, it's ridiculous. It is ridiculous how much this has gone up. So yes, give me a little bit of pause. But come on, man, this is nothing. This is no damage. It's deserved. It's necessary. Because guys, remember, if you just keep going straight up without pausing, it sets up a bigger correction, a bigger crash down the road. So when you get these,
well, and Tyler, you as a trader, not just as an investor, you hate those massive volatile corrections. But as a trader, it takes so much time for the charts to get back to being clean.
Yes.
And it's just back to being clean. It's not back to where the price was, because quite frankly, as a trader, you don't care that much. It's just back to getting back to not being a crazy volatile mess.
Yeah.
Yeah.
So,
hey, Tyler, very quickly, you were talking about IWM in comparison to what the NASDAQ was doing.
Yeah.
If you'll add, just to show people they can add this comparison tool in TOS, that allows you to quickly just compare one asset versus the other. And if you'll just go to comparison.
You doing this one or a different one?
No, it's no, it literally is called comparison. So if you'll go to your studies and then.
Yes.
Yeah, that way. And then just, yep. And then if you go to edit studies and just put XL or go Qs or XLK.
Yeah, Qs.
Right. And you were talking about visualizing where the NASDAQ is in relation to what IWM has done.
Yeah.
And so if you're looking at that, you'll see the pink line, that's the performance. And so right now, the IWM is outperforming. And it should continue in the short term.
Yeah. Yeah, agreed. So the overlay helps. The overlay certainly helps where you can compare two different tickers. You know what, Matt? This is the same way as is often the case with Thinkorswim.
Yeah, there's so many things.
40 paths to the
same. Yeah, I know. There's so many things.
This is the shortcut too. Same thing. That's what I was thinking. But yeah, you are correct. Sometimes the scale's off just a little bit.
Yeah, your scale is vastly different than mine right now.
Yeah.
So, yeah.
But the point is valid. You can skew it. Like, here you go.
There it is.
There you go.
Yeah.
So, but having an anchor, if you want to say, am I looking at it right? Having an anchor like the 50-day moving average or the 20-day, and saying where am I at relative to that line in the sand, is a good way to make sure that your chart scale's okay.
I agree. I do that all the time. I use moving averages just to see scale. All the time. It's a great way to do it.
We should keep talking. The more we talk about IWM, this has got up.
It just keeps going. That's what we do. We keep talking IWM. It's like tick, 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 tick. By the time we get done today, you're going to be threatening on your upper band on your iron condor there, Ty.
I'd be surprised. But
you would also be very happy.
Yes, I would not mind. So as far as the big three indexes, tech sucks, small caps are great. That's your takeaway. From a sector perspective, I always like, Tim, so I got a gridiron here.
Before we move into sectors very quickly, Ty, can we go back to tech? Can you just for the tackle community, identify that one key support level that you're looking at in tech? Because I do think the rotation is real. I think the rotation has been real. I'm not that concerned about the market, to be quite frank with you, like at all. But I am concerned about tech and discretionary.
Yeah.
Those two specifically, I do have a little bit of concern about. Technically on them, can you just break them down from a support perspective? Because I just want to make sure that you're seeing what I'm seeing. I'm looking for confirmation here, you know? Yeah.
So when you're looking at support zones, sometimes they're obvious, sometimes they're not obvious. And the more times the level's tested, obviously the easier it is to identify and the more significant it is. So if I'm getting in Matt's head, I'm thinking Matt's looking at these prior pivots here, and there's quite a few that are clustering around this, 310, I would even call it here. And you hit it 3 times last week. 3 times. You came down, smacked it. So
what is it about that number 3? Because if it just hits 2 times, you're like, that's a double bottom, let's buy. 3 times, you're like, it's in the corner, it's going to get hit. Tyson's biting its ear. Let's get out of the way. Like, what is it about that?
Yeah, I think so. The theme here, it's less 2 to 3, and just the fact that if you keeps hitting it, it's like, all right, bulls, come on,
what are you
got to follow through. Yeah.
Pick up the pace. Let's go. Right. Like, yeah, it's just when it hits it that 3rd time, it's like you tried once on the bounce. You got a 2nd time on the bounce. I mean, how many opportunities are you going to get? Like, so I do get a little bit.
I'm like picturing a civil war where, we're straight up Gettysburg and they keep coming and we're like, hey, we're fending them off, but they keep coming back. Like, my pals are dead. Like, eventually they're going to go through all of us. If they keep
Tyler,
coming.
You're wearing the wrong hat for the Civil War. Tim, you have the right attire on.
I can Civil War conversation with anyone. Tyler, you should have brought up like zombies coming at the gate. They were just relentlessly pounding, and you just have to fight them off and fight them off and fight them off.
Activision did drop a new zombies map. I'm just saying.
ATVI, yeah.
That is true. Tim, you were there in the Civil War. I just read it in books. How was it? But yeah, so the idea is there's a finite amount of demand. And every time you test it, you're chewing through buyers, and eventually they give up. So the other thing I'll mention too, Matt, is if you want to make it easy, rather than saying where is tech going to bottom, I think it's easier, instead of trying to pick the end of a trend, just say how high does this have to get? How strong does this have to be for me to change my opinion? I like something as simple as just setting an alert at this near-term pivot high and saying, I don't know how low tech's going to go, how long this messiness is going to last, but I do know it's going to have to get above 324.5 to turn the short-term trend and to get me optimistic. Until that happens,
I love that, Tyler. I love it because, and again, that short-term pivot could change into we're analyzing buying at support real fast if support gives here at 310. Because at that point, you're looking at double bottoms, and maybe it's 300, maybe it's 290, maybe it's the 200-day moving average at that point. We just don't know. But given the current set of data, right, we know where resistance is, we know where support, we know it's volatile within the range. Tyler sets an alert at 324 to 325, says, okay, I don't even want to look at the NASDAQ right now, given the fact that I don't want to play in that type of volatility. So let me set an alert to where I am willing to play. So I don't even look at it. I like that. And I certainly am looking at that same support level, the horizontal pivot there. And it certainly could get broke. But again, tech could violate support, and it doesn't mean the market violates support.
Yeah. Well,
guys, and let's remind, energy was a garbage sector for years and years and years and years, and the market still was a robust bullish. Sectors can be bullish and bearish, guys, in an overall bullish uptrend.
And I'll also hasten to add, you will see us get very, very bullish on tech when the chart dictates it. It's not an anti-tech thing, right?
No, push the chips in the middle of the table and bet on that no, you want, Tim, what did I say? Every year I say this thing when we do the prediction podcast. Every year you're going to bet on tech, and every now and then you're going to feel real foolish.
Yeah, but over the course of your lifetime, if you have strong,
you're gonna be very happy.
Just do just fine. Yep. Yeah. Because tech's been a juggernaut, will continue to be a juggernaut in the future, just not right now.
No, every now and then sectors have this, guys. Give them an opportunity to have a bad quarter every now and then.
Yeah, it's much more normal market conditions than just everything going up all the time.
Anybody who's saying this is abnormal is wrong. Abnormal is the last year of the market.
That's exactly right. Let's flash through the commodity market next if we can here, Tyler. Crude oil hitting $60, kind of looking pretty healthy, at least for today. Actually, there was a really weird inventories report I saw. They had a build of like 22 million barrels or something like that. I'll get the exact number. But what are you seeing in the chart there?
Oh, we are way back to normal market activity if they're that far off on the EI numbers. Oh, wow.
I hardly ever watch. They had a
I
build of
missed that.
21 million barrels, and they expected a draw of 700,000.
Wow.
So it's like
They're back. I'm ready to call the entire market back. They're missing terribly on oil numbers. That's fantastic.
it's so weird.
I can finally start tracking that number again. Oh,
It grabbed my attention.
this is a beautiful thing. I can't track labor market numbers. They don't make any sense any longer. Okay. EIA makes sense to me. They miss. I'm good.
I think it was the biggest build in like 30 years, 40 years, something like that. It was a
And
crazy number.
That is a big build.
Yeah, just out of
Isn't
nowhere.
that supposed to be bearish? Because that
You
means
would-
there's more supply.
Don't start.
Tyler, don't you talk
Logic,
backwards
do not bring
economics.
logic.
Don't bring that. Tyler, the economy's reopening up. The build is going to be used by the economy reopening up. Don't ruin my fairy tale.
I got it. The chart of crude oil is, look, if you want to know how prices trend and what a good trend looks like, you print this out, you put it on your fridge, and you look at it every day as you go for the orange juice and you say, wow, that's what a good looking trend looks like, which is impressive because crude oil has not done this for a long time. So
No,
look, they defended it right, the 20-day moving average. And it's got a nice bullish reversal candle today. It's picture perfect. There's nothing not to like here.
Mhm.
And no wonder energy is the top performing sector today. No wonder. Crude oil's ripping off support.
Yeah, and you do gotta like crude. I still maintain that as long as crude stabilizes, the play here is energy.
Sure.
That's my opinion. I do believe energy is the play, but I just, like I said, you gotta love the bounce here today. But energy is just, I think energy has 20% to catch up here.
100%.
Well, you have easier trading vehicles in the energy
Yeah.
sector too.
Yeah.
So it's easier for those listening to play something on XLE or XOP or Exxon or some energy stock than it is to go jump into futures with.
I just think, and I also think oil is going to be a little bit more volatile than the energy charts are going to be.
Hey, don't mess
energy-
don't mess with my picture perfect
No,
uptrend.
no,
It's going to 300.
Listen, that would end the world. But yes, you would make a lot of money while the world is ending. But yes,
Beautiful.
I get it. Okay. You want precious metals?
I do. Yeah. Gold down again.
I was going to say, are you sure you want precious metals
I
right
just
now?
want to take a big, still haven't found support. We don't know where it is. Marty's dropping. Let the trampoline tell you where support is. Don't assume where that's going to come in and find itself. Same lines there, Tyler. I don't see anything to update outside of just, we're fading downward. What do you see?
Same thing. Yeah. I mean, this is a good lesson in draw your lines. Look, why do we care about support resistance? Well, because generally they're good guideposts for where the price is going to go. Look, it broke one support level. It's working its way down then to the next support level. And it kind of makes sense because there really wasn't much between 1775 and 1675. Now, you would hope that it takes at least a pause around 1675, but it doesn't have to go down that far. It's just that's where the next reference point is. So yeah, you draw the lines in the sand. It's kind of depressing, Tim. Yesterday they had a nice bullish reversal candle, and today it's like, you silly bulls, right back down. Yeah, it's, they're fighting a little bit. You got some bottoming tails, a little bit of a fight. It is oversold, but the trend is still down. So even if it did have a couple of green bars, look what happened the last umpteenth times you had a few green bars. It gets rejected. So you need a change in trend. You don't just need a change in pivot here or swing.
Correct. I agree 100%. Flash through the dollar, Bitcoin, just technically dollar stuck in the same middle of the range. There's nothing to update there. You can move right past that one to Bitcoin. Take a look here. Constructive here, guys, healthy, obviously the last couple of days since the beginning on Monday, a much bigger bounce here today. Tyler, what are you seeing in the chart?
That's got to make you feel kind of good too. If you view Bitcoin as a proxy for risk appetite. It'll be interesting to see if Bitcoin completely falls apart, if there is any impact whatsoever to stocks or not. But you got to like it. I mean, yeah, it had a pullback. It held 45,000. It's ripping higher. If you thought you were getting a massive crash because it was overbought, not yet. You're not. So,
well, and especially here today, I think you got to be even a little more bullish on Bitcoin, given the fact that it is a risk asset, and certain risk assets are getting it taken on the chin right now.
Yeah.
You know, you look at the NASDAQ chart here, and you're like, wow. Like if I were to look at the NASDAQ chart without knowing what's happening on Bitcoin,
Yeah,
I would assume Bitcoin was down.
Yeah.
I would, but Bitcoin not only is up, Bitcoin's confirming above 50,000 on a day when the NASDAQ's getting just kind of taking it on the chin there. I think that's a very positive sign. And if you can get above 50,000 for the first time in a week, I think bulls come back.
Yep.
Bulls are winning today. There's no question about that. That 50,000 was a little line in the sand there for intraday traders. Popped it today. We'll see if it can hold it and run. But I agree. I mean, and it's a good comment, good point there, Matt. With the NASDAQ down and Bitcoin up, it's just another idea. We've got rotation. It's not like all risk-on assets are selling today. We have definite rotation through different classes. Let's move into stocks, guys. You know, there's a couple corporate news items that I do want to get to, Matt. I know that you've got a couple earnings roundup. Do you want to do earnings first, or
it's up to you. I can quickly do earnings. We don't have a lot. Just going to quickly run through some numbers. Tyler, if you see anything technically on the chart that interests you, just take it over from there. Okay.
Yep.
Let's first start with Ross Stores, ROST. Ross Stores reports EPS numbers of 67 cents versus the expectation of $1.03. Very, very, very big miss on EPS numbers. Revenue came in slightly under the expectation of 4.2 versus 4.3. Revenue decreased 3.7% year over year. Pretty big miss on EPS. Nothing else to say here on Ross Stores. Had a potential trade with a cup and handle breakout if it were to have a positive response, but it did not. So Ty, I don't see anything here. Do you?
No, and this is the type of stock when you look back where it's like, I don't know when I would have traded this.
No,
it hasn't had very many clean patterns.
Ever.
Yep.
DLTR, very quickly, Dollar Tree. Unlike Ross Stores here, Dollar Tree comes in with a slight beat on EPS numbers, 213 versus the 212. Revenue came in at 6.8 versus the 6.8 expectation, and revenue did increase 7.2% year over year. This feels like a nice little bullish response coming off the 200-day moving average. I don't know the news that came out during the day that fostered this type of movement during the day, though.
Yeah,
I don't know. That's
either.
one heck of a candle.
That's an impressive.
That is a bullish engulfing candle if you've ever seen one. Like that is. I wouldn't even say that's textbook because I'd have to explain exactly what that was in a textbook. Again, I would have to look into a little bit more of the data. I did not do that on Dollar Tree. I just saw the technical movement off the 200-day moving average and thought it was interesting. But the numbers, the raw numbers were passable. They were fine. Beat on EPS, slight beat. Again, I'd have to look in to see what is causing that candle, but that's interesting. Dollar Tree, Ty, do you have anything technically there? Like,
it's up 5.5%. I mean, I wouldn't be bearish after today. That's for dang sure. So I'm sure you have some short covering going on today. That would scare me if I was short.
Yeah, me too. Let's move on to Urban Outfitters, URBN here, and this is one very similar and same type of concept we saw here on Dollar Tree. A little bit of a gap down. Just cash open has done really, really well, both for Urban here as well as Dollar Tree. But Urban comes in very similar to Dollar Tree, 30 cents against the expectation of 30 cents. Revenue came in line at 1.1 versus the 1.1 expectation. I mean, these numbers aren't bullish, engulfing, snapback, breakout of high base type numbers, especially on the intraday. I mean, we're talking about a gap down on the earnings and a bullish response on the cash open. Ty, what do you see technically here? I need to look into. Yeah, well, yeah, it's the high base breakout and it's interesting, but all of these were gap downs and then just run on the cash open.
Yeah,
it's interesting.
It's impressive. I mean, this is it's a breakout. And I actually like how it faked to the lower side and then shook them out and then came back up.
Well, yeah, like on Dollar Tree, I'm not really that interested here from a trader or an investor in Dollar Tree, but Urban, my interest is peaked from a trader's perspective with the response from the bull side. Again, I would just need to see what happened here because the gap down was based on the numbers and then it ran aggressively from the cash open. So I need to look into that one a little bit more, but that one's interesting. Next, Wendy's, WEN. Wendy's fighting for support there at $20. A break of $20 could get ugly in the short term for Wendy's, so keep an eye on that if you cash flow on it or if you're an investor in Wendy's. Wendy's comes out 30 cent, miss on EPS 17 versus 18. Revenue numbers slight miss 474 versus 476. They also lowered EPS guidance. Again, this was another gap down run on the cash open, very similar to what we saw on Dollar Tree and Urban. So this to me is concerning numbers in Wendy's. You got to be concerned from a raw numbers, and technically a violation of $20 could get ugly for Wendy's in the short term. So keep an eye on that. And then last, Tim, HPE, Hewlett Packard. Hewlett Packard, interesting little candidate here. I want to get Tyler's technical read here. High base technical pattern. They came out pretty decent EPS numbers, 52 cents versus 43 expectation. Revenue came in 6.8 versus 6.8. Revenue did decrease 1.7% year over year. So a little bit of a high base on Hewlett Packard, but I just wanted to quickly go through those earnings, Tim. I said it was going to be quick. It was quick.
Yeah, some interesting company names, but not big. Not a big day on earnings like we've seen in even the last couple of weeks. We're moving towards the end of the season here, but love the run through. And there was some interesting price responses after the cash open. That always grabs your attention. That Urban chart, probably the best, like you said, Tyler, out of all the ones we just looked at. A couple other corporate items I wanted to go through real quick. Lyft. Let's bring this one up here. Lyft actually filed a report with the SEC about their expected revenues and whatnot. They actually don't think they're going to lose as much money this quarter, because part of that is they have reported they had the best week of rides in the last week of February since last year pre-pandemic. So some encouraging data for the ride sharing companies. The stock was in a high base situation. Now we've broken out here. Tyler, pretty good news for Lyft. The company is now being responded by investors and traders in a bullish fashion. Is there something here, or have you missed it after you've had an 8% move?
Both. Look, this is the opposite of Ross Stores. If I look back, I see lots of trade opportunities here, which makes me like it more. Last couple of breakouts, this has a good pattern, a good history of seeing follow through on breakouts. So today is a breakout. There is something here. It was a trade. Are you late? Yeah, I mean, you should have bought it at 60, so you are late. Are you too late? It depends. Depends on how you're going to trade this. For me, Tim, if I was doing an aggressive directional trade, I'd say, hey, I'm too late. If I was doing a cash flow play, I don't know, maybe I would do something. I personally just don't like the idea of chasing something up 10%.
It's tough unless you're going to play the momentum. Obviously, the momentum is strong, though. If somebody decide to get in and play that, I would not necessarily tell them they couldn't, right? They got to make their own decisions on what they're doing. Yeah.
No, I mean, if you are looking at it right now, and this is a question we traders have all the time, guys, like literally all the time. How many times during the scout and report meeting does somebody bring up a pick and somebody ask, "Are you late?"
Every time.
Right, every time. So it's a very natural conversation traders have between each other, and quite frankly, it's a question we it's a debate we have all the time within ourselves, right?
Yeah.
To answer that question, you got to map out the trade. And to map out the trade, you got to look at it from a momentum perspective. And when you're looking at it from a momentum, you do exactly what Tyler did. You drop it down into an intraday time frame and you try to map out a trade. And this to me is a pretty simple trade from a momentum perspective. It's above 63 and it's underneath the pivot, the intraday pivot at 61.5. And so you certainly can momentum trade that. You don't have that much risk there because you got a fairly decent intraday support level to trigger your stop loss under. And so I do like it from a momentum perspective. It can be traded momentum. The other way to trade it if the momentum does not pick up is to wait for that Cody special, to wait for that snapback retest of 60 and to wait for the confirmation. And sometimes that could be 2 days. If the momentum carries out, it could be a week and a half, right? You just don't know. But with the breakout and the strength and Lyft obviously being part of that economy reopening up play, and on the backs of them reporting that they had their highest traffic since the pandemic began, that's a pretty good fundamental report to give Lyft some, quite frank, lift off here.
Yeah, I see what you did there. Nice little pun. Little punny here on a Wednesday.
You should have saw what I was going to do on Marty breaking support. But then I had to think, wait a second. I remember saying that when I was 8 years old, and that might not have been the best thing to say in 2021. So I held back on that one, Tim. I did. You would. In fact, I was like, Tim would be proud of me. I held back.
I like it. I like it. A couple of other quick ones here, guys. Las Vegas Sands is not going to be in Las Vegas for very much longer. Actually, what they're doing is they're selling a lot of the properties that they have there.
Aren't we just going to call them Macau?
I guess I don't know. I mean, you got to do something. They're going to be focused on Macau and obviously Singapore and some of their properties down there. That's where they get most of the revenue right now. Anyway, guys, you look at the fundamentals. That's where their bread and butter is. So,
if you're Las Vegas Sands and you're like, don't want to deal with Vegas or Macau, I'd want to deal with Macau and Singapore. I'm going to tell you right now.
They chose Macau and Singapore,
and they chose right.
And the market is celebrating it. Market's gapping them out here a little bit.
Macau, Singapore, Hong Kong, all of those have far less restrictions and regulations as U.S. and Vegas does.
Tyler, is there something there technically?
It's a pretty chart. Look, we looked at all these casinos for our report last week. Wynn was the one that ended up making the report, which, by the way, Wynn is triggering today.
Good trigger too.
It is a good trigger. We liked Wynn a little bit better just because of relative strength, but so I do like the Wynn trade better. The challenge with Las Vegas Sands is just that it gapped up. I mean, so you would have been looking to buy it over 65 and change. It opens at 66 and change. So then you got the dilemma of, do I chase it $1 higher than what I wanted? It did pull back and give you a chance, though. It's okay. I mean, it is a good looking chart. It is a good trend. It is a breakout. And it's just tough with the way that it played out with the gap.
Mm-hmm.
Yeah, we looked at those casinos quite a bit over the weekend in our scouting report meeting, and Wynn was our candidate. And I think Wynn, if you're looking at Vegas and you're saying, okay, positive news on Vegas, it's a really good one. I agree with Ty though. I think the trigger on Wynn is a little bit better here. You're not chasing here. I think you could trigger above the high at 39.48 and still be perfectly fine here on Wynn. And quite frankly, if the Vegas trade works out, the Wynn trade's going to work out too.
Mm-hmm.
Well, look at the volume pattern too. It's like, I mean, high volume on the previous breakout, little pennant on low volume. You got the volume increasing today. That's textbook.
I know. And look at that decreasing volume over the last 5 days. Look at just that consistent decreasing volume, and then like clockwork on the breakout. Let's break out and let's add the participation to it. It's a positive sign.
Yeah, that volume read is really, eye-catching, no question.
I love volume reads. I know Tyler loves volume reads. It's like we feel that we can get an edge there, and I do think you can get an edge when you understand volume. I don't think a lot of people understand volume, Ty. I would like to see some more content on volume, Ty. You're really good on it.
Yeah, write one of your blogs about that. I think that'd be
you're
awesome.
Really good on it.
Yeah, that'd be fantastic. DraftKings, two quick last ones here. And then Tyler, I know I wanted you to actually talk a little bit about GDX at the end as well. But DKNG, actually another story that, I think is a good story for DKNG long-term if they can do it. They actually are up a little bit earlier today. They're now giving that back. We'll get a technical read from Tyler. Announced a partnership with Dish Network to put their sportsbook daily fantasy experiences right into their TV platforms. They're looking to expand into Sling TV as well, boost mobile services, integrated all into. So when you're watching sports, you can literally just be playing on DraftKings right there as you're watching the game. It's pretty interesting if you think about it. There's nothing there technically to buy today there, Tyler. In fact, that's a pretty nasty candle up there in that red fashion. What are you seeing there from the chart?
Well, yeah, when a stock gaps up on news, you got to analyze where is it coming from. I think it's interesting that this gap right here, it gaps up and runs, because when it was gapping, it was clearing consolidation, and you had an bullish catalyst. The problem with today, Tim, is you look from pivot to pivot. This thing's gone from 57 to about 70, and then it gaps up to 72. You're gapping after having run for 3 days, and it was a pretty big run. And so that's not the type of gap you want to chase. I'm not surprised short-term traders are taking profits. And yeah, it's kind of a nasty candle. So might need a little bit of time to digest. But look at its history. I mean, show me the last time chasing a stock, chasing DraftKings when it was up that much made sense. It was not a good risk reward entry this morning. So I'm not surprised.
You know,
Yeah.
I certainly like the news for DraftKings, and I agree with Tyler's analysis. It does depend where the news comes out, and I guarantee you, if DraftKings was sitting at $57 right north of the 50-day moving average, this stock
Yeah.
would be up 10% today.
On that news.
it-
Yep.
on that news. This news is positive for DraftKings, and I do think you were very elevated, especially after the earnings announcement. You're so tight against that earnings announcement; it's going to create a little bit more volatility, and people are obviously going to be looking at DraftKings on any type of pullback here, and so I think it does do some service to look at where that level could form. And for me, obviously you're going to be looking at that 20-day moving average catching up. Obviously when Ty adds the 9 EMA, you'll be looking at that from a momentum. But I'm looking at this more as a longer term. I don't love DraftKings as a swing trade. I think there's better candidates to swing trade than DraftKings in this space. When you look at that on a weekly chart, though, on DraftKings, I'm looking at that 65 handle, and the price isn't that much north of 65, but I'm looking at that 65 handle as a really, really good line in the sand that says, you know what, you just broke out of a double top on the weekly chart. You got a clear line in the sand. Do not go under that. Let's see how it navigates 65. But even I like the news. I like the company. I think it's a better longer term play than a shorter term play. And so I do like the weekly chart as the beginning point of the analysis.
I agree on all fronts there, guys. But yeah, absolutely. One quick last one. Actually, just another positive story for Exxon Mobil. Actually, energy's been heating up here recently, like we've been talking about. They actually planned to raise their dividend. They started outlaying those plans.
Oh
obviously we
my
had some
goodness.
Are you
dividend
kidding
cuts.
me?
Oh my
Wow.
goodness. Exxon Mobil.
Wow.
Look at you.
They
Look
wanted
at
What? Because they're making so much money?
Wait a second.
Come on.
No, their plan is to release new shares to pay down the dividend. No, I kid. They're not doing that. I want to make sure they're not. Everybody understands I was joking on them releasing new shares to offer a dividend. I was kidding, but it wouldn't shock me. No, for a year straight, guys, there was big time concern, including from us, regarding if Exxon would shave their dividend a little bit, given the fact that energy went negative, or not energy, but crude oil went negative. Everybody was concerned. We saw it happen across the board. Exxon increasing dividend. Wow.
Well,
Yeah.
they're almost spiking the football. They're like,
Yeah.
not only
Wow.
are we not going to cut the dividend, screw
Wow.
you guys. We're going to issue bonds. We're going to go borrow money at zero, and we're going to start giving you
Yeah.
more cash, right?
Wow.
Yeah, well done. Well done.
And
Well, how much are they increasing it, Tim?
they actually they're laying
it
out
doesn't
plans
matter.
to increase it for the next 4 years. So they're just talking to the investor crowd. I think they're just trying to reaffirm, okay, guys, we're a dividend company. We're going to be a dividend company in the future, and here's our plan. So investors who hold Exxon are obviously going to celebrate that. Yeah.
Do you feel like for people, the layman, it's like, hey, I wish I could borrow money at 1% and then
It's not a fair
pay a
playing
7% dividend. It's like, okay, well, go buy Exxon, man. You're part of the game, man. They're just borrowing the money cheap and then putting it in your pocket every quarter.
Tyler.
Yeah, it's great.
It's kind of like this. Let me print the money. Let me borrow the money. Let me then finance that through the loan process.
Mm-hmm.
Okay. Let me borrow the money at 0% interest rate. Okay.
Mm-hmm.
I will then finance all of that money on borrowing and issuing debt to other people at 7%.
Mm-hmm.
It seems pretty like that. That's a good business model, right?
Mm-hmm.
That's the U.S. government's business model over student loans. So yes, the government does the same thing that the corporations did.
See what you did there.
So, but the only thing is, we can't do that.
Right.
We don't get to play by the same rules.
The street likes it. It's just like MicroStrategy going to buy all the Bitcoin. It's like, look, man, if it works, I guess go ahead, right?
Yeah, they like it today. I want to get a couple of quick technical reads. Some companies that were coming up in the chat here today. Give me a look at Valero. Pretty good discussion going on around Valero earlier. Just asking, hey, what are you seeing there from a technical perspective?
We talked about Valero in the scatter report meeting. We broke down so many different energy plays in the scatter report meeting, and coming into the week, the read on a lot of stocks was we needed some consolidation, right? And Valero was one of those candidates, right? You just came out of a Friday where Valero snapped back and it kissed off that 90 MA and just responded bullish and
Yeah.
but again, you're looking at that on Friday and you're saying, obvious, man, great candidate, high flyer happening. Valero's a good company, but you just need some time to cook. You just did. You need some time in the cooker. It's in the crock pot. It's got to cook, and now it's got another 2-3 days behind it. You got a high base pattern forming, and it's breaking out of that right now. So it's just, yeah, you got to like the company. You got to like the momentum coming into it. And quite frankly, I think the 2 days of consolidation was really, really, really healthy for Valero in the short term. And yeah, I still think it's a little tight against the price action. Another couple of days would have been really good for me. But, the market's not going to wait to give you what you want. You got to be able to move with the marketplace. This is, I wouldn't call it a breakout yet. I want to see it above 80, but it's in that range of, there are traders calling that a breakout and triggering at this point.
Yeah, interesting read on that one. So another one that was in the chat a little bit here was U.S. Steel. Obviously,
little Steel Canada.
Yeah, listen, looking at the $20 handle here as a breakout, guys.
Listen, this little candidate can fly up and down. We were very concerned about still at 16. Oh man, I was like looking at Still, being like, just don't do it again. Just not again, Still. Just one time, Still. Did that one thing, right? One time, and still gave it that one time. 16 held, the head and shoulders formation held for a week, and now you're looking at that $20 potential breakout, and absolutely, I believe that can be traded. $20, one of those very important, significant hold numbers. US still has what, 6 times testing the $20 level. You get a break and a close above that, still can run to 24 in literally 2 days, guys.
Yeah. I think it's
2 days.
Absolutely clean
Still
trigger
can
about
run
20.
to 24 in 2 days. It might take 3. If there's a down day or a doji, it might take 4. I'm just giving you the range.
This thing was looking nasty at 16. If it broke below 16,
are you kidding me?
All been triggered. They would have all gone out.
I would have put this head and shoulders formation into that next whatever textbook Tyler's writing. That's a beautiful head and shoulders formation. There's a lot of concern over that horizontal neckline at 16, but it held, and that's positive. So good thing, because again, US Still isn't my cup of tea in the still place this year, but it's an important psychological component to that thing.
Absolutely.
And real quick, we did have Nucor. We did have
Nucor
Nucor on the list this week.
On our list this week.
Yeah,
it's made a nice little 6% move this week too. So
yeah.
Well, and like it's threatening another breakout as well. Yeah. Absolutely. And then lastly here, Tyler, actually, I was interested in what you and I were talking about pre-show. Last night you were on the Coach's Show with Coach Gino, one of our flagship programs that we've been holding since tackle trading was a thing. Since the very, very beginning. That was our first webinar we always put out there. And you and Gino broke down a trade on GDX that, I think is at least interesting. And I wanted you to talk a little bit about that. Coach Gino was talking potentially about a naked put. I think if you're going to do anything with GDX here, you have to start with one very simple assumptions. If you're selling naked puts, it should be for boomerang style, for ownership, for long term. It means that you probably want to own this for years and years and years and years, is what I would guess, if somebody's doing it that way. But give me a daily or even like a long-term weekly or monthly chart. I think it's in an interesting spot. Walk me through this idea, Tyler.
Yeah. The first thing I would say is anytime you see a coach or just a trader bring up a chart that you thought, oh, that thing's left for dead. I thought we were staying away from gold because gold's terrible, blah, blah, blah. It makes you think, it says, oh, maybe I should rethink completely writing off something and maybe look at it differently and realize that at some point, everything that gets beat up becomes an opportunity, right? You'll see that in tech over the next couple of weeks or months.
Yep.
And so it was just a reminder that one trader might come and look at GDX and be like, oh, I'd short the crap out of that. And yet Gino and I are talking about it last night, like, all right, I'm now tempted to buy the thing. And what's a strategic way to use options to do that if I like it longer term? And so all downturns, unless the thing goes out of business, are eventually buying opportunities, and it's just a matter of when is it worth pouncing. So the premise on this, you look at the weekly chart of GDX, and the first thing, and credit to Gino, he's the one who brought this up. The first thing is percentage wise, this peaked at 45.78. It's at 31.35, down 15 bucks on 45.78. It's down a third. It's been cut by 30, almost 33%. So this is deep in a bear market, right? Conventional wisdom, 20% is the threshold. You're down 30% plus. Gold miners are in a bear market. Well, do you think they're going to go down 40%, 50%, 60%, 70%? I mean, at some point, that drop in gold is priced in, and the assumption is they start to become more attractive. So you look at this long-term chart, you look at some longer-term support zones, you see one right around where it's currently at. We were also looking around this 26 level. And so you look at these longer term support levels and you say, at what point am I interested in getting my foot in the door and getting some exposure, right? And yes, let me add the 200 real quick here. Because you can also look at longer term moving averages to get a sense of where buyers may show up as well, right? I don't know why the 200 didn't come on there automatically, but let's see. Let's put that in green. Okay, so you've also got the 200 weekly coming in around 26 and a half. So the idea was, I don't want to be a hero and say it's going to bottom at 31. That'd be pretty gutsy. But what if I say it's going to bottom somewhere between here and 26? Or what if I say I'm willing to pick up some shares around 27, 26? You look at the longer term chart, you build a case for where it makes sense to get involved, and then if you know how to use options, you do something like selling a naked put. You get paid for your willingness to buy GDX at a steep discount. So I'm going to pivot to that here in a second. Tim, did you have any other thoughts on the chart?
No.
I do. When you're looking at GDX in this environment, a couple things. Number one, I do not like boomerang trades here. Like, boomerang trades are not great in volatile conditions where, no, I like selling to own.
Mm-hmm.
Selling to own. Boomerang is selling to own to write cover calls.
To do covers, yeah.
It's a position trade. It's not an investment strategy. You're looking to get in and out, and you're looking to maximize cash flow. GDX, you're looking to own here, right? And so I love the breakdown on the analysis on the weekly chart. And Ty, when you were talking about it, earlier today, I was looking at it as well. And when you're selling to own, you got to find that level that you're comfortable with, right? And this is the perfect time to sell to own on GDX, quite frankly, because you are down 33% over the course of the last few months. And and yes, are they going to go out of business? No, this is a gold mining ETF. They're not going out of business. We're good there. So it's a matter of, okay, where do you feel you have real good value, right? Well, personally, I feel you do have fundamental value already. I feel you have that at 30. I feel you have that at 27. I feel you have that at 25. I feel you have that at, quite frankly, 35. I don't think there's a fundamental equation here that I personally need to overcome, right? So I'm comfortable there. So you then look at the technical component and say, okay, what level on that chart do I just love this? And quite frankly, I love anything above 25. Like that was my line, anything above 25. And I was looking at 26 and 27 specifically in terms of strike prices, Ty, because that got you that 25 level. And again, I don't love it under 25. I love anything above 25, 26, 27. I love that 26, that right there, that support level, Ty, that 26 on the weekly chart that you were looking at. You got 25 as the backdrop to kind of give you a little bit of range underneath 26. I love 26. I also love 27 with 44 days left in the contract as well. Where's your head at there?
Yeah, so this is where you can kind of decide. It's a trade-off. You go closer, you get paid more, but you got to buy it quicker. You go further away, you get paid less, but you got more room for error. So this is what Matt's kind of talking out loud, thinking out loud is, where do I land? Where do I land?
Yeah.
So certainly it can vary depending on trader A goes a little more aggressive at the 27 strike, trader B goes at the 26. But the minimum is you're going to have like, what is the minimum I'm willing to accept? You know, because at a certain point, it's just not worth it. So they got to pay me enough to make it worth it in the first place.
At
And Matt,
26, oh, go ahead, Ty.
I was going to say this is where you want to look and see what is the margin requirement. If I sell the 26 for $25, they're going to make me put up 260.
Yeah.
For heaven's sake, that's a 10% return. For me, that would be sufficient, right? If it was a 2% return, I'd say, nah, forget it. 10% for me on this type of strategy is actually really good.
Well, and Ty, you're getting a 10% ROI on an 11 delta contract at a strike price at 26, where it's at a historical level that you love.
Yeah.
And again, you have all of these are really good numbers, but they're really good numbers because of where GDX is relative to its historical chart.
Right.
Those are why it's really good numbers. I love this trade if you're looking to get into gold. I love it because you're again, you start this with, we're down 33%, gold's out of favor, it's lost all its shine. I promise you that pain's going to end sooner than you think.
Yeah.
Right.
And the only thing I would add, just from a timing perspective, is you'd say, well, when do you pull the trigger? Well, I think we've already established it probably doesn't even matter if you really are willing to buy it at 26.
You do it today.
Yeah.
Listen, if you wait for it to bounce off these lows and goes to 33, you're not selling the 26.
Yeah.
Well, and give me like a 10.
If you like the 26 strike price, you sell it today.
Yeah.
That's when you do it. If you're hesitant, you're like, well, I don't know, then you wait for a little bit more price action. But to me, it's like, no, you're selling a naked put on an instrument you want to own. Like, don't make it complicated.
And it's already oversold. It's not like it's up at resistance, looking like it's going to roll over. It's already gotten smacked a decent amount. So yeah.
Yeah, and I also think you have some short-term support around 30 to 31 too. That's going to give it a little bit of short-term help too. So,
and you do have some confirmation. Yesterday was a green candle. This morning's sell-off got bought. I mean, there are some signs that buyers are emerging here.
Well, and specifically, we haven't talked about gold in conjunction with this, but gold at 1680 has major support.
Yeah.
Yeah.
Yeah, if gold continues to fade, it keeps bringing GDX down, it will eventually find support, and GDX will probably be.
And by the way, the most likely scenario here is you just make your $25 per contract.
That's right. That's the high probability
trade. I mean, that's just the most likely scenario. In the unlikely event you own GDX, you don't freak out whether it's at 26, 25, or 24. You just start owning it like an investor and start writing cover calls when the timing is right.
Well, and you got it 43% off the highs. It's not like you're in Salesforce at a gajillion times sales and there's all this fluff. I mean, it's already been.
Whoa. Are we dancing on the grave at this point?
Like pile it on Salesforce. Poor Salesforce.
You're the one who interlaced the word garbage 7 times when you talked about Salesforce earlier.
Benioff is trying to fix the landfill problems in San Francisco.
Get the Slack deal done, Salesforce.
Dude, the Slack deal has not been good.
It's not done yet. Absolutely.
It will be, though. It will be. Tim, I think we're getting into the hopeful stage of CRM.
It's a hope right now, or a long-term thesis.
I hate it. I hate it so much.
It's not good. Love the analysis on GDX, guys. And by the way, if you're out there, you're a pro member, go back and watch the recording from the coaches show. We post those whenever we do a nightly webinar. We post them in the morning the next day. It's up on the site right now. Guys, that is it here for today. Not a lot else out there in the news. Obviously, tonight we got a big Trade Masters event. Cody, I believe you're back there and you're coming in. You were the champion from last week. You did a little crowing. No need to dance on Tyler's grave again. He's already, kind of licked his wounds. We're moving forward now, my friend. Who are you fending off tonight?
I think I got the Canadian. I do believe I have old money homes. So, and Tyler might be a little bitter with me because I asked him for some trade picks this morning and he said, no, I got nothing for you.
What you should do is steal this GDX trade. This is Mark's kind of thing.
Oh, I should steal this, but I mean, it's already here.
You can't steal it on it. No, you can't steal it.
No.
You can't take the halftime report stuff and no. Come on, original thought here. No, Cody, one word of advice. Don't listen to Tyler. You beat him last week, and he has no good towards you right now.
Do it, Cody. I would totally do it. Don't listen to these guys. They've never been on Trade Masters.
That's what I'm wondering. When are they going to step into the ring?
Cody, you don't want that.
When there's a viable challenger, we'll talk about
Oh.
that. When you guys bring the skills up just a little bit more.
Let's be real, Cody. I mean, you're
All
not ready
right,
for that yet.
All right.
Tonight, though, 7 o'clock Eastern, by the way, out there, if you're Team Tackle, you already know about this show. We've been doing it for a couple months, become very, very popular within our community. If you've never attended it, make sure you're there tonight. And if you have attended, get your popcorn ready, come back. Coach Mark will be hosting. Greg Old Money Holmes is going to be taking on Cody to challenge him for the belt this week. And it's going to be a fun one as always. Let's get some final thoughts here. Ty, anything for the team out there?
Really, I like the GDX trade. I think, again, I just don't obsess about this noise. It's noisy, it's choppy, it's messy. Wait for the market to resolve itself, but don't get depressed on the tech rollover. The money's moving into small caps, so it's not a broad-based thing. I'd stay optimistic.
Yep. Matt, final thoughts from you?
You know, I agree with Tyler. I'd stay optimistic. There is some rotation and there is some concern in some of those very aggressive areas of the market, and we got to watch those support levels. But again, this is not a broad-based thing. This is rotation, and this rotation has been going on for some time, and tech can't get ugly in the short term. That does not mean the market has to get ugly in the short term. And so, keep your eye on the price, and that is technical analysis. The second thing, Tyler, when you're talking about GDX and you like that GDX trade, I like that GDX trade too. I mean, but this is when you start looking at GDX, in my opinion, from a value perspective, from a long-term investor perspective. Typically, you don't want to be chasing, things that are up 48% in the year as a long-term investor. Those are great trading environments. But when you're looking at trying to pick up value, a lot of times you're trying to pick up value in the face of pain. Yep. In the face of everybody else selling, in the face of everybody in the herd doing the exact same thing. And, Tyler's looking at GDX right here saying, you know what, it's down 33%. Even if it goes down another, 10, 15%, I still like it long term. So let me trust my system. Let me trust my analysis, and let me go about finding value in the market for me. And I loved it. I absolutely loved it. I think that's the right approach to go about it. And I think he's spot on the GDX example. Even though Buffett doesn't love gold, he would have been very, very, very happy with Tyler's analysis on GDX today.
Yeah, I agree. I love it. All right, guys, that's it for our show here for Wednesday. We're going to be back tomorrow with the regular halftime report. Obviously, Trade Masters tonight. Don't want to miss that. And if you are still brand new to our channel, you've not done it yet, subscribe, click the bell. That way you make sure you are alerted whenever we do go live with any of our programs here on our YouTube channel. And for those of you out there who are not yet a pro member, if you've been around our community, if you're learning, I got to tell you guys, there's so much that we do on the back end. That's the whole thing here at Tackle Trading. Pro membership, there's a link to do the 15-day trial in every one of our YouTube videos. I'll also drop it in the chat right now. Come and join us. Go back and start some of the courses and go through some of the webinars and just put your butt in the seat and learn how to trade the markets the proper way. Outside of that, guys, we are out for today. Have a wonderful, safe rest of your day, and we'll see you guys tomorrow.